Welcome to The Explainer. Today, we're digging into the massive hidden investment opportunity that's powering the entire AI revolution. Everyone is completely obsessed with the code, with the algorithms, but the real gold rush, it might just be happening in the copper, the concrete, and the cooling systems that make it all possible. Because here's the brutal truth. The AI revolution will absolutely die without a better battery and a much smarter grid. So today, we're going to look at how to own the toll booths of our 2026 energy infrastructure.
So let's just dive right in with a question that honestly, almost nobody is asking. What is the single biggest threat to this whole AI boom? And no, it's not a smarter algorithm from a competitor, and it's not some kind of market crash. The real threat, it's something much more fundamental, a physical bottleneck that you just can't solve with a clever piece of code.
The answer is power. A shocking shortage of raw, stable baseload power. Just to put this into perspective, OpenAI alone is planning for data centers that will need an additional 26 gigawatts of power. A single gigawatt can power almost 1 million homes. So we're talking about an energy demand equivalent to 26 nuclear power plants, just for one company. This isn't a software problem. This is an energy crisis just waiting to happen. Okay, so here's how we're going to break it all down. First, we'll look at the AI power paradox. Then we'll get into the crisis of atoms. After that, we'll find the grid's toll booths. Then we'll figure out how we're solving for stability. And finally, we'll wrap it all up with the investor's playbook. All right, let's get into our first section, the AI power paradox. This is all about how a digital revolution is facing a very, very physical problem. So the popular myth out there is that AI is just software, right? It just kind of lives weightlessly up in the cloud. But the reality is, this is a business of atoms. Success, it turns out, is completely dependent on some pretty boring physical stuff. Getting permits for power grids, having enough water for cooling, and of course, building these massive, specialized data centers. And here's where things get really interesting. There's this financial engine that's just accelerating all of this physical demand. We're seeing these things called circular financing loops. It works like this. A giant like Microsoft invests billions into a startup, say OpenAI. Then OpenAI turns right around and uses that exact same money to buy billions in cloud computing from Microsoft. It's this self-reinforcing cycle that basically inflates demand, and it's just pouring gasoline on the fire for this infrastructure build-out. And if you need any proof of just how real this problem is, look no further. This isn't some future prediction. It's happening right now. Microsoft is reportedly looking into resurrecting its own nuclear power plant just to lock down enough energy for its AI plans. When a tech company starts acting like a utility provider, you know a massive shift is underway. All right, let's move on and actually put some numbers on this, because when you see the scale of AI's energy appetite, you realize this is a full-blown crisis of atoms. Okay, get ready for this number. According to McKinsey, just to meet the demand for AI and IT by 2030, we're going to need nearly $7 trillion in global infrastructure investment. To give you some context, America's total capital spending across all industries in 2024 was about $8.3 trillion. So the AI build-out alone is a huge slice of all industrial spending on the entire planet. And here's where we're headed. By 2030, the power demand from just AI data centers is projected to hit 156 gigawatts. That is a 3.5 times increase in capacity from where we are today. This is not a gradual curve, folks. It is a nearly vertical wall of demand. Our current grid just wasn't built for this, and it's creating what you could call energy deserts, where demand completely outstrips the local supply. So you might be thinking, why not just build more power plants? Well, the problem is a total mismatch in timelines. You see, the AI world innovates in a matter of months, but the physical world of infrastructure, that moves in decades. Just getting an application for a new nuclear plant reviewed can take 5 years, and then construction can take another 5 or more. AI's growth just can't wait a decade for the grid to catch up. It needs power now. Now, with this incredible crisis of supply versus demand, there comes an equally incredible opportunity. But you have to know exactly where to look. This isn't about picking the winning energy source. No, it's about something way more durable. And here is the crucial point. It doesn't matter if the energy comes from solar, wind, nuclear, or natural gas. It really doesn't. You can innovate a new way to generate electricity, but you can't innovate around the need to move it. Someone has to own the power lines, the grid that transports that electricity from where it's made to where it's used. That infrastructure is completely non-substitutable. This creates what's known as a toll booth investment. Think about it. It's an essential service with absolutely massive barriers to entry. I mean, you can't just go out and build a competing power grid in your backyard. So everyone, from a massive data center to your home, has to pay the toll to use it. And that gives the owners of that grid durable, long-term pricing power, no matter what's happening in the broader economy. Okay, but as we scramble to meet all this new demand, we're turning more and more to renewable energy like solar and wind. And this introduces a huge new problem: grid stability.
I mean, the sun doesn't always shine and the wind doesn't always blow, right? This creates a really volatile, unreliable power supply. And this volatility leads to a famous problem in energy markets called the duck curve. Basically, in the middle of the day, solar panels flood the grid with super cheap power and prices crash. But then, as the sun sets, all that power vanishes just as people get home and crank up their AC, causing prices to skyrocket. This constant up and down makes the grid unstable and unpredictable, and that is absolute poison for a data center that needs perfect 24/7 power. So what's the solution? Well, a really fascinating paper from ARK Invest and Square points to a surprisingly elegant answer: a very unique type of energy buyer. They argue that crypto miners are the perfect partner for renewables. Think about it. They're flexible, they can set up anywhere, they can turn their machines on or off in a split second, and they have an almost infinite appetite for one thing: the absolute cheapest electricity they can find. This makes them the perfect buyer of last resort for all that extra solar power in the middle of the day that would otherwise just go to waste. And this creates a brilliant energy arbitrage model. But let's be clear, this is bigger than just crypto. This is the blueprint for something called a virtual power plant, or VPP. Here's how it works. Step 1. You co-locate renewables like solar with battery storage and a flexible load, like a crypto mine. Step 2. During the day, when that solar power is super cheap and abundant, you use it to charge up your batteries and run the mining operation. Step 3, and this is the magic part: when the sun goes down and grid demand and prices spike, you sell that high-value energy you stored in your batteries back to the grid for a huge profit. This grid edge technology literally transforms an unstable liability into a stable, profitable asset.
So the big question is, how does all this translate into a practical investment thesis? Let's break down the playbook.
Okay, so the winning strategy here probably isn't about guessing which AI model is going to win the war. It's about owning the picks and shovels, the essential, non-negotiable, physical stuff. That means looking beyond the Magnificent Seven to the companies that are actually enabling this whole revolution. The ones providing everything from specialized cooling and networking to the boring but essential physical deployment and maintenance of these giant facilities. This table gives you a few specific ideas. So for broad exposure to those toll booths we talked about, you could look at an ETF like POWR. For a more targeted play, think about thermal management. Companies like Vertiv are critical because these new AI chips run so incredibly hot, they need advanced liquid-to-chip cooling systems just to function. Or you could look at networking. A company like Arista provides the high-density fiber optics that are basically the nervous system of these data centers. Without them, the whole thing just grinds to a halt. And that leaves us with one final thought to chew on. As this AI revolution completely rewires our world, we have to ask ourselves a pretty fundamental question. Will the true, lasting fortunes be built on elegant algorithms in digital code, or will they be built on the raw, physical business of atoms? The copper wire, the cooling fluid, and the concrete foundations that make it all run.